Hi, Keith Prather here with the NCM Marine update. So this is the leading index, and I've got it popped up. You can still see that it's kind of interesting. We're getting a little bit of a late seasonal surge, if you will. It's actually beyond the season where we do see some purchasing, still see some actual dealership activity. The index itself came in fairly flat month over month, but it's up over the last couple months. We go back to the seasonal surge in May and June, as we're going into the summer, which we always expect to be a big surge. A little bit of a slough there in July, but then kind of recovering and kind of creating some unseasonal growth kind of heading into October. And so it's interesting. And I know we're coming into boat show season in some parts of the country, and hopefully we'll see a lot of foot traffic. We're going to talk about that and talk about sort of what's driving the market here in just a moment. I did want to go in and show you the producer price index, and this is a great chance for me to give you a bit of my caveat. We are still, at the time I was recording this, in the middle of the government shutdown, and there's no government data flowing, so we don't know what's happened to the producer price index. We don't know what's happened to the labor market. We don't understand really what the undercurrents in the economy are, other than what we can get from some of the private sectors and some of the private sector readings and surveys. And so this data will update, but up through some of the forecasts that we're able to put together, we think it's about running about 2% higher year over year. Most of that's going to be inflation driven input costs. But it does also still show and reflect some of that more positive demand that looks like we saw in the index before. And I will remind you that this index, this leading index, works like an economic leading index, and that it gives us an idea of what the underpinnings of the economy are looking 6 months ahead. So this will give you an idea. If it's trending up, gives you an idea that the next 6 months should be pretty positive for the industry, and by how much. And then if it's trending down, obviously it's the opposite. And so what we would say right now is that based on this index being fairly flat month over month over the next 6 months, you're going to get a slightly better version of what you got now, but it's not going to be dramatic growth. We're not seeing a big surge, but it's reasonable growth. So that's kind of what we're looking at. Retail spending then, so there are some problems in the consumer segment, and some of that affects marine, but not all of it. Marine is also driven by many other sectors, and so I want to talk about those here in a couple minutes. But I just want to show you that most of our models right now are showing a little bit of a dip between now and the end of the year. So consumer spending pulls back just a little bit, and then it rebuilds some momentum, and you see early next year it starts to rekindle itself and it grows. Overall retail spending, then you've got a consumer that looks like it's going to be strong enough to outspend other eras, and it's still going to be well above the long-term trend line. So we're still getting at least good signals from a consumer spending perspective. I don't have the slide in this particular deck, but if you watched the automotive one, you saw it. But there's a current Q3 GDP reading that we get from the Atlanta Fed, and it's updated. And that reading right now shows almost 4% growth in Q3, driven primarily by strong consumer spending signals. So consumer spending still very strong, and so I think that's going to continue to be a backdrop overall. But here's again what we're worried about, and I've said it so many times, I'm probably tired of it. And if you watch multiple videos, you're sick of hearing me talk about it. But again, K-shaped recovery. Normally we get a V-shaped recovery where everything comes up together, but this one's very rare, and we see sort of middle and upper income households, those making $75,000 or more, doing very, very well, and they have over the last 4 years, and that's been driving a lot of the growth, a lot of the activity in the marine sector. But below that $75,000 segment, struggling a little bit, and we've been seeing some challenges. I'm worried about the upper end of the K though, and that's the reason why sentiment is so low, is that the upper end of the K is now seeing something systemic. They're seeing problems with corporate automation, robotics, and AI replacing high-paying back office, white collar, upper middle management jobs. And we're expecting over 4 million jobs to get replaced between now and really over the next 36 to 48 months. I think a lot of those job losses will be early in the cycle. And then we should see about 1 million jobs created in addition. So again, a net loss of about 3 million. But baby boomer retirements, as we get a little bit closer out to 2030, we see about 22 million boomers that will be hitting retirement age, and a big percentage of them will decide to go ahead and take retirements. One of the things that I don't think I have in this one, yeah, I'll talk about it in a second. But think about that transition as we transition and baby boomers take retirement. Many of them are going to be in their 60s that decide that they've got enough wealth creation, and maybe an older generation, grandmother, somebody has passed on cash to them. Generally, though, it's going to be the boomers passing it down into, Gen X, the millennials, and Gen Zers. And so, anyway, as we see the tail end of the boomer generation get to that age, they've got a lot of wealth creation already, and so a lot of them will take that early retirement instead of lingering and working a lot longer, as maybe what we saw with the generation that was retiring a decade ago. And so it's just a little bit different. And so we think anyway that we're going to lose about 22 million, but that wealth transfer that takes place is going to be pretty significant. And this boomer generation that's retiring is going to have a lot more disposable cash to work from, especially if the stock market stays high. If the stock market stays up through the end of the year and early next year, I think you are going to see a lot of people come out of hiding. And I think you'll start to see some better spending overall. Um, Interest rates are also critical. And I've got just a couple notes here. 80% of all boats are financed. And what we've done is gone in and looked at the RV category, and some other categories for NCM. And what we find is that this seems like where current interest rates are today, if we get another 50 basis points in cuts, it seems to hit a threshold where it stimulates growth, it stimulates activity. And the reason why I bring that up is because the last 50 basis points that we saw, the 25 that came in September and then the 25 we just got in October, didn't hit that threshold. So it stayed a little bit elevated. And so people would look at the interest rates and still say, it's still a little too high. But for some reason, historically, when you get the next 50 basis points of cuts, suddenly it pulls a lot of rates down below 6%. You see mortgage rates start to come down, and it seems to be a stimulative point. Right now, the Federal Reserve is forecasting that they're going to trim 25 more basis points in December, and you're going to get another quarter point sometime in January or February. So again, we are probably talking about a Q2 moment, and our forecast earlier in retail sales. You remember you saw that dip between now and early into 2026, and then a recovery that would coincide with this story, and it probably is telling probably the same story. The one thing I wanted to talk about is that wealth transfer that I mentioned in the former slide. There's expected to be over $12 trillion transferred between older generations, so the boomer generation, and Gen X, millennials, and Gen Zers between now and the end of 2030. And for a lot of workers right now, for a lot of households, that's just extra income. It's extra wealth that they might have been counting on, but they weren't exactly putting it in the bank yet. They weren't spending it. They didn't have it to spend. And so we know that there's a big portion of that $12 trillion that is going to be spent on what we know the younger generation loves, which is experiential things. And many of them are going to get a boat in their inheritance, right? They're going to have a boat passed down to them. And a lot of them aren't going to like the type of boat that they get. And so they're going to want to go in, they're going to trade that boat, and they're going to use that wealth that was created at the same time to maybe upgrade that boat. And I'm just as I talk to dealers, you're starting to hear a little bit of that. You're starting to see some of that. Some people coming in and trading those older units for stuff that, for brand new units that have, better electronics. They're a little more energy efficient and fuel efficient. Just a lot of amenities that maybe the older generation wasn't really interested in. And so that's going to create some opportunities. The other thing as well is we're going to see the construction sector boom. The construction sector, especially for non-residential, should do very, very well as we go into 2026 and then even 2027. And in the construction sector, I'm not trying to stereotype, but historically, it's been a very strong freshwater fishing category, pontoon boats, a lot of a lot of runabouts. And so there's going to be a category of boat and a category of buyer that should see really good, strong wealth creation over the next couple of years. And I've told the story many, many times over the last, 5 videos, but they're expecting that more millionaires will be created in blue collar manual labor types of positions over the next 5 years than in any other category except for finance. And it's just going to be really fascinating to watch what that does and how that changes spending. But I have a feeling the marine categories, especially in those categories that have done pretty well this year, pontoon boats, freshwater fishing, again, as I said, done very well. But hopefully you'll even see an uptick in the, PWC categories. I know it's been kind of sluggish for you over the last year, but hopefully if we start to see an improvement in the bottom end of the K, those $75,000 a year and lower incomes, that's how those households start to recover and they start to see the ability to spend, especially if interest rates come down. I think you'll see that category and that catalyst and that stimulant kick in. So, um, all right. Well, that's what I had for you. This was just a general macroeconomic forecast, but I don't think it applies as much in this category. Watch those other things that I talked about. I think those are going to be a lot more important overall as we move forward, especially interest rates. Interest rates are going to be that catalyst and that trigger. Everyone's going to get lifted a little bit, and sentiment's going to improve when we get the government reopened. Some of the trade uncertainty starting to get behind us, so that's going to help a little bit. The government's going to do everything it can to build momentum going into 2026. Whether it can accomplish it or not, that's another story. But it's going to do everything it can to try and do that. And some of these categories that we're talking about can kind of ride that little economic wave. So, anyway, hope everyone stays safe. As we get new data at the end of Thanksgiving, we'll be able to update all of these measures and we'll have a little more clarity. But again, hope you stay safe. Hope you have a fantastic Thanksgiving. It's easy for me to say. And we'll talk to you on the other side. All right. Take care. Bye bye.